Welcome to the Behind the Curtain podcast, your real-world guide to real estate investment and property management.
Welcome to Behind the Curtain Real Estate Podcast, final episode of the season, 2022. Today we're going to talk a good bit about what this past year has been like, talk about some case studies, some investors that have done some things that have been very successful in this market. I also want to get in depth about why Memphis is so stable. I get that question so many times from out-of-town investors who are wondering why Memphis continues to do so well, even with inflation and high interest rates. I also want to talk about some new growth areas that we saw this year. There's some areas that we kind of thought were going to come up eventually, and this year they really started popping.
Yep.
So let's just get into it. So obviously this year, Glenn, you went on about a 5-month vacation, so you didn't work for a while.
Yes, I did.
Glenn is back with us, though. Thank you. But this year has been I would consider a banner year for me. I probably did more in the summer of this year than I did all of last year. So that I'm not going to tell you that because then people might think I've made a crap load of money, but I've also spent a crap load of money, so it's kind of a wash. But this year alone, the market just got to the point where it was just out of control. It got to the point where I would put an offer in on a property $5,000 over asking with an escalation clause up to another $5,000 and for cash, close in 3 weeks, and I would lose it. And it baffled me why I was losing these deals because we were so aggressive in writing these. You're like me. You're an aggressive agent. You like to get the deal done, but you also don't want to be irresponsible to your investor and not put them in a good financial situation. The end result is that you had a lot of these hedge fund groups across the country that were seeing real estate as a safe, stable investment versus what was happening in the stock market at that time. It was bouncing like a ping pong ball. So they started going out and just buying lots of properties, sight unseen, over asking, cash. The downside of that was they were beating up the sellers after inspection and trying to. Their idea was an old trick that the old dirty agents used to use: throw a highball offer at it, lock it up, and then beat it down after inspection. But they were successful in that process. I couldn't figure out why they were doing it, but as I dove into the market and trying to understand why I keep losing these deals, it didn't dawn on me. Real estate is probably, it's not a massive growth industry. It's not something you're going to put your money in and become a millionaire overnight, but it's always stable. Your money's always safe. What goes down in real estate.
Buying gold.
Yeah. It's never
a good hedge.
Exactly. It's a good hedge. As I worked my way through this insanity this summer, I literally thought that Joe Biden had passed a bill saying we're never going to cut down another tree or build another house because people were buying them like they were about to be gone, and there was never going to be another house to buy. So as I thought through this, I started researching the real estate market nationally as a whole, and I noticed that there are areas of this country that rocket up extremely high. California, Nashville, New York, a lot of areas of most of Florida.
I think Austin is starting to do
Austin.
that.
And they take off like rockets. Like when they go up in value, they go up 200, 300, 400%. But the negative side of that is when the economy changes, in the slightest bit, they drop like stones.
What goes up must come down.
They do not hold their value. But as I went through this and I looked at Little Rock and started comparing Little Rock and Memphis and some of these smaller markets that have very heavy numbers of renters. Memphis, for once, is 48, 49% of the people inside of city limits rent. So I started doing this, looking at these numbers, and then it dawned on me. I understand why hedge fund groups were buying property in Memphis as fast as they could. Because Memphis, believe it or not, has been one of the most stable markets in the country. Not the most stable, but one of the most. And I couldn't figure out why it was so stable. I kept asking myself, well, why would Memphis be so stable? 2008, big crash. Everybody's seeing 40, 50, 60% reduction in values. Memphis saw 18, 20, maybe 21. But by 2010, we were level. 2011, we were exceeding our previous numbers. The numbers dictate that because there's such a large renter pool, that renter pool props up and keeps moving the rental market, which in turn keeps the real estate market stable here, keeps it from crashing, because most of those renters work in the service industry, or work at FedEx or St. Jude or the airport or Amazon, Nike, one of these facilities. They don't make a ton of money, but they rent. And guess what? During COVID, during the crash, during any other catastrophe hitting the country with the economy, FedEx, Nike, Amazon, the airport, they all still have to keep functioning, so these people continue to go to work.
It'd be interesting to know how much it is that they actually pay these folks that work at Amazon and Nike, because it can't be that bad. I mean, you're talking about distribution labor, basically. And I have to imagine that they're making at least $9 or $10 an hour.
I know some that are making up to $18 an hour.
Yeah.
Right. So you get a family that it makes $30,000 a year. You know, they're renting because their credit's kind of banged up. They probably hadn't kept up with their bills the way most of them should. So they rent. And because of that large renter pool, that keeps the values of rental properties up, which in turn keeps which bleeds out into the standard owner-occupant market and keeps those markets stable. So between 2008 and 2022, so we're talking 14 years, the values of real estate in Memphis have increased 100%.
They've exceeded where we were when all this started.
Way over.
Yeah.
Way over. California, I just talked to one of my good investors in California, Michael. He said California's seeing 30, 40, upwards to 60% reduction in values across the board. I have investors, and we're going to talk about them shortly as a case study, that is actually living, they live in California, but they've bought property here. They're actually selling their property in California and moving here. When they came here to visit, they described the neighborhood to me that they live in. It's a version of Fraser. And these folks own 15 rental properties. But that's because that house is worth $400,000 or $500,000. So we'll talk about that in our next topic. So my point was is that everybody that calls me, everybody that emails me, always asks the same question: why Memphis? It's simple. The market's stable. You buy a $100,000 house, it may drop to $95,000 because of inflation or the economy this year. But what is it going to be worth next year? $100. What's it going to be worth the year after that? $102.
I've been surprised some of the changes, the positive changes that I've seen in property values in the last 2 or 3 years. Sears Crosstown, Cordova.
Yeah.
I mean, I've been in some cases astounded because I was on the losing end of a couple of those deals. You know, and I had listings where I got 12 and 14 offers in a single day for a property. You know, and then it's who's got the best offer. And a lot of them were cash.
Yeah.
You know?
Well, I can tell you, I thought the hedge fund groups had just finally lost their mind. Their program, their thinking, their numbers were just insane. That there's no way someone's stealing money, they're dumping it into real estate and they're stealing it, or someone's embezzling or something. Something's going on. But if you look at the numbers, a smart hedge fund guy realized that if I put money into real estate, I'm not going to lose anything. And there's a much greater chance I'm going to gain, which is way better than what's happening. I mean, the stock market is down overall this year, 38%? You calculate that the amount of money that you're talking over $6 billion in losses in the stock market.
Wow. You
haven't seen that in real estate. Not in Memphis.
No.
If you had $1 billion of real estate in Memphis, it may be worth $995 million. I mean, you may have lost a little lately, but not much.
Well, you know, they talk a lot about whether or not we're going into a recession. Number one, we're in a recession. Number two, are we going to see because I think some folks have been, like, looking at it from my perspective, I think I would love to see a little bit of a correction in some of the property values.
We're seeing that.
You know?
I wouldn't say a correction. Prices aren't dropping, but properties are staying on the market a little longer. There are less buyers because of the interest rate. So the only buyers that I'm still getting guys that are getting mortgages, but they understand that I can buy this house for $80,000 today, and I may only break even this year. But next year when rents go up, I'll make money. Next year when the values go up, I'll gain equity. They're not buying today for immediate gain. They're buying for gains next year and the year after, and that's a smart way to do it. Mm-hmm. If you're only buying for gains today, you're setting yourself up for a huge disappointment.
Yeah.
But I haven't really seen values drop that much. I see a little bit of area, like in Raleigh, those areas have stabilized and actually come down a little bit. Whitehaven, an up-and-coming market that's hitting hot right now is Fraser. 5 years ago, I wouldn't have taken a house in Fraser if you gave it to me because I'd had to pay the taxes on it.
Then they put in an Amazon fulfillment center, easily 1 million square feet, if not twice that.
Then right next door, Nike fulfillment center.
Yeah, and that's another huge.
They take up a linear. I measured it because I always drove by it and I wanted to know how much property that was. It is literally 1 mile from the beginning of the Nike property to the end of the Amazon property. That's how much real estate they take up. Now those plants separate Raleigh and Fraser. So Raleigh got overbuilt, or not overbuilt, but overbought, and you're going to buy an average rental house in Raleigh for $100,000. So the smart investors went into Fraser right on the other side of the plants and started buying, rehabbing, and flipping, and now we're seeing that upward trajectory in Fraser. An example of what's happening in Fraser, here's what happened in Raleigh. I have one particular investor that I put into Raleigh 3 years ago, maybe 2 or 3 years ago. He bought 3 properties there. I think we paid about $70,000 a piece for them. He put about 15 in each one of them, rented them out. They're all renting for $8.95 to $9.95 a month. This past year, when the market topped out, he decided he wanted to sell. So I ran some CMA and said, well, you probably got about $8,000 equity in each one, which is really good for 3 years. So we threw them out on the market. 2 at 105 and 1 at 107. We sold them for 110, 111, and 115.
Wow.
So he pulled about $18,000 per property out of that in less than 3 years, on top of the cash flow that he created during this 3-year period. Those are the opportunities that I'm looking for. I know that's what you're looking for your investors, and that's what I tell my investors. Don't be afraid of certain markets. If there's an upward trajectory, you get into it early. The early entries are the most risky, but also the most profitable. But even if you buy a house at $60,000 in Fraser and it doesn't take off, next year is still going to be worth $65,000. Next year is still going to be renting cash flow, and next year we can sell it and get you out of it. It's a lot different than the stock market. What are you seeing lately with the end of the year?
With the end of the year, things started to really get quiet at the very end of the summer, when the Fed kept raising interest rates, which we don't know what they're going to do about that. I think they could raise them still. As
long as you can cash flow or even break even on a property that's going to appreciate. If I told you today, buy AT&T stock, you're not going to make a dime for 3 years. But on the 4th year, it's going to go up 2 or 3%. The fifth year and 6th year, and every year after that, it's going to grow 2 to 3%. Would you do that?
Well, you know what I always say, and that's there's always somebody buying and always somebody selling. And people always ask me, don't at some point doesn't the market become saturated with investors? And the answer to that is no. People get into the market and get out of the market at will.
That's right.
And so you have people that bought houses 15 years ago, and they've gotten to that place in their life where they're ready to cut back and sell some of their assets and start living on the money they've made. And so that's when they start releasing those properties for sale. And I think that's what the big hedge funds will do.
Yeah.
But certainly it's changed dynamically from a seller's market to a buyer's market in the last 4 months.
Yeah. But I will say I've written 5 offers this week. Actually, I wrote 3 on Christmas Eve, and I wrote 2 on Monday. I got 1. And they were all cash at ask.
And that's a pretty good close rate.
Well, it's a pretty good close rate, but not when people assume the economy is trash and this is a buyer's market. No, sellers are still getting market for their properties. They're still able to get multiple offers, at least here in Memphis. And I think smart sellers understand one thing. Memphis is a hot market. There's a ton of renters here. You can always rent a property. So if you can always rent a property, your chances of loss diminish greatly. Where you fail to do well in real estate is when you buy in markets that are oversaturated with low amounts of renters, where your property sits there for 3 months or 4 months vacant. Obviously, things are slow now for renters. People don't move during the holidays. As soon as November hits, things die off until about January when they start thinking about moving to a new neighborhood next year. Other than that, Memphis stays pretty steady on the rental side. 2022 was a banner year for real estate. I have never seen a year like this year before. I've never seen the oddities and what I thought at the moment was complete insanity of buyers. But there was a method to their insanity. I after researching, began to realize that. And then I started going insane myself and doing the same stuff. So, and preaching the same message about buying real estate. But compared this year to 2021, I would say that I doubled my business this year. I can't tell you what drove that other than I'm a damn good agent and people like me. That's maybe one reason. Another reason is my partner was on vacation for 5 months, so I had to pick up some of the slack. But I think mostly the difference between this year and last year was the optimism that people had in buying real estate. It's very different this year than it's been any other previous year. People have always been skeptical of the real estate market and kind of walking on eggshells and trying to make sure they don't make any mistakes. But this year it was Katie bar the door. If you had a house with windows on the door and you put a for sale sign out, boom, it was gone. They bought it. I still don't understand why that happened. I'm sure in the near future that'll begin to unfold and we'll realize. But in 2021, I had a successful year. 2020 had a successful, even during COVID, had a great year. I mean, people were stuck at home. They were buying real estate.
There's a lot of different things laying on top of each other with interest rates and with, inflation and unemployment. And we don't know what the outcome of that's going to be. That's why I say we don't know how soft a landing we're going to have whenever it does land. But I'm not afraid of it because it just means more opportunities for investors.
Well, there is plenty of opportunity. Now, here's a theory that I was given. In full disclosure, this guy is a conservative. He's a Republican. And he rightly so bought and then shut off the spigot. He through cash, bought, and turned off the spigot. The last time him and I spoke, I'm like, well, you just quit buying. I mean, you bought 12 properties and you just quit buying. He goes, I'm not buying right now. I'm like, why? He goes, why do you think I bought all those at the beginning of the year? I said, I honestly don't know. You bought 12 properties and then you just quit. He's got plenty of cash. He said in December of last year, he was at a conference and a guy told him that based on what he's watching and seeing with Biden's policies, interest rates are going to have to go up and we're going to get into an inflationary period. So he bought all of his stuff in advance because, well, here's what's going to happen. He assumes he's going to lose value in those properties. He's not concerned about it. But he says every time we get into an inflationary period or possible recession, when we come out of that recession, whether it's next year, 2 years, or 3 years from now, he goes, what happened? Go back and research. The real estate market, the stock market, and anything of type of investment takes off like somebody just put fuel rocket under it. So he's not buying now. He bought everything ahead of time because he was told and believed that because of Biden's policies that inflation and other factors in the market were going to slow things down and stabilize it, not kill it, but level it off. Mm-hmm. So he got into properties that he probably owes the same amount on or is worth what he paid for it. But he's banking on the fact that it's going to be worth 15, 20, 30% more here in the next 3 to 5 years. I thought that was a smart way to approach it. He's not blaming Biden, right? He's not knocking Biden for what he's doing. He didn't say that to down Biden. He just said people saw the writing on the wall. He goes, you go back and look at Jimmy Carter, you look at George Bush, you look at certain things they've done and what happened preceding their policies, and you can kind of predict what's going to come 12 months, 18 months, 24 months from now. He goes, so far, I banked right. And I thought I was smart. So let me give you a case study, and this just gives you a full picture of the real estate market, investing, what certain markets are like compared to other markets. So I have a couple, just wonderful couple, that I started working with them about 2 or 3 years ago. They live in California, I think in Los Angeles County. They bought a couple of properties. They had a rough run at the beginning because they bought one that I met them actually because they bought a property from an agent and ended up being just an absolute disaster. And that's how they got in touch with me, and we kind of got it straightened out, got it done, and got a tenant in it and got them rolling. So anyway, I sold them a package of 7 this past summer. And in my conversation with them, they kept saying, we're moving to Memphis. We want to buy a house in Carterville. And I'm like, okay, fine. When you get ready to move, just let me know and we'll find you a house in Collierville. And then one day I just, out of the top of my head, I said, why are y'all leaving California? Because I was curious if they were leaving because of the policies, if they're leaving because of the government, if they're leaving because whatever reason they're leaving for. He goes, Brett, when we came to visit you in Memphis, we spent one afternoon in the town square in Collierville and ate at Dyer's Burgers. And we began looking around Collierville. And then the next day you drove us through Raleigh, Fraser, Whitehaven. And we realized that where our rental properties are better neighborhoods than where we currently live in a $500,000 house in Los Angeles County. He says every single night there's gunshots. Every single night there's robberies, there's break-ins, cars getting stolen. He goes, this is right in my own neighborhood. I have a house that's worth $500,000. He goes, but Fraser, most of the neighborhoods in Fraser are nicer than the neighborhood me and my family live in.
Oh, my God.
And I make plenty of money. So they are now 11 properties. And this next year, they're going to wait now because the market's changed dramatically in California. They're going to wait until the market shifts. They're going to sell their house, and they're going to be able to come from California with $500,000 and buy what most people would consider a mini mansion in Collierville.
A McMansion.
And pay in cash. And now have their 12 properties producing cash flow for them. And that's a case study. The reason I brought that up is, again, to differentiate the markets. Differentiate what's happening in California versus what's happening in Memphis, what's happening in New York versus Little Rock, what's happening in parts of the country that are dramatically changing. They are producing now on their 11 properties, I think he said his gross is $13,500 gross. He's netting about $7,800 a month right now. He said, knock on wood, I've been lucky. He goes, I've had a lot of repair issues. I got good tenants. They're paying rent. He's done this in 3 years. But anyway, this case study was important for several reasons because it is a true success story of they just have regular jobs. They're not wealthy people. They're not lawyers or doctors, right? They just have regular jobs, make regular income. But they were smart. They bought a house. They've doubled payments on it and whatever and paid it off in 15 years. So they have an asset worth $500,000. And if you met these folks, they're just average people. Right? You would never know that they had that kind of cash laying around. They've been so smart with their money. But the biggest success of them is this package and these properties that they purchased. I've got a lot of good investment stories and good investors that have been very successful. To me, this is one, most of these guys that have been successful have money to play with, right? They have a couple $100,000 sitting in the bank that they could spend and pay cash for. These folks didn't have that. They worked hard to pay off that house and with a plan that they were then going to start buying real estate, which then that real estate was going to be their derivative of income for them to relocate to another part. They didn't realize it would be Tennessee at that time, and eventually get into a better lifestyle, which they are 1-2 years away from doing. And I think it's a phenomenal story. I'm not going to attribute their success to me, although I think I did a pretty damn good job of guiding them.
If he must say so himself.
Of course. I got a couple of horns. I'll toot them all. If you're interested in discussing, just because you call us and talk to us or email us does not mean you have to use us as agents. I've had investors tell me they didn't like me. So I won't hurt my feelings. I'm a big boy, but you can contact me directly at 901-692-7401 or Glenn
at 901-301-8368.
That's right. Or you can go to epnrealestate.com, and if you go there and go to the investment section, you'll see a nice, beautiful picture of all of us. Each one of us has a little bio and our cell phone numbers in there, our email addresses in there. If you're interested in real estate, or you're just interested in talking about it and learning more about it, understanding how to get into it if you're not in it already, or if you're in it, but you're thinking maybe I should change my strategy, I'm not as successful as I want to be, just pick up the phone and call us or shoot us an email. We'd love to talk to you. I think we've helped a lot of investors that are not our investors. We've helped them out of bad deals. We've helped them launch their real estate buying careers.
We've helped them sell properties that they shouldn't have purchased in the first place.
We spent a lot of time helping investors get out of assets that were upside down. So we understand the game. We understand the market. We understand the investment side of this. And again, I have another horn I'm going to toot. We're damn good at it.
And I love talking to investors on the phone. You know, I can have a good 20 or 30-minute conversation and pretty much tell an investor what to expect if they want to start investing in Memphis. And it's a good time to do that because of everything we got going on here.
And it's also a great educational source for me personally. When I talk to other investors, whether they're my investors or not, I learn a lot from them. Different strategies, different mindsets, different theories. Everybody's got great ideas. Some work better for others. And I've learned a wealth of knowledge from other investors this past 2 years that I think is invaluable. And guys that have been around the business a long time, guys that have seen the crash, the ups, the downs, the sideways. They've seen it all. They've bought in high interest rate markets. They've bought in low interest rate markets. And learning from those guys has been an invaluable piece of information for me. So don't be afraid to call me, and don't be afraid to share your ideas with me because I'm always looking to learn.
Thank you for listening to Behind the Curtain Podcast, your real-world guide to real estate investment and property management. Be sure to subscribe at BehindTheCurtainPodcast.com. And if you'd like to learn more about Enterprise Property Management's real estate services, please visit us on the web at epmrealestate.com. This has been a Sound Ideas Group production for Enterprise Property Management, Inc.